Justin P.
Brad, how are you?
Doing great, buddy. How are you?
Doing okay, can't complain. Just trading the markets, listening to your broadcast, getting ready to rock and roll here.
Awesome. I really appreciate, Justin, you taking time to be on the show. I know you're working closely with Peter, and more to come on that. But thank you for joining us today. I know a lot of people are fired up because you always have some good stuff to talk about. But before we get into your trade ideas and stuff, Justin, just like we did with Blake Young yesterday, if you don't mind, maybe take 5 minutes, and just kind of talk about your career, how you got into trading, when things started turning, you know what I mean, and what you really like to trade most. Could you do that for us?
Yeah, sure. I'm a native New York. Yeah, sure. I'm a native New Yorker. I grew up in on the Upper East Side of Manhattan. I attended NYU's Stern School of Business, and I have degrees in finance and marketing. And I got into trading at a young age. My grandfather used to buy me stocks, and he used to kind of get me into it. Oddly, he grew up in the Depression era and was always very leery of the stock market. He always was, I guess, afraid of another 1929 type of crash. So he used to get me involved into like the more like the Colgates types of stocks, the Procter and Gamble's, things that paid dividends and that would never go out of fashion. But I always sort of had a flair, if you would, for technology stocks, and I guess the momentum names, because that's sort of the faster type of money.
Nice.
So that's sort of where it got started. I really got more heavily into it when I was in college. I was trading in college. I would mostly trade the technology stocks. Like I was involved in the Amazons and the Ciscos back in the day, those types of stocks.
Okay.
So
even though your grandfather was like being the blue chips, you were like, give me the high growth, the high tech stocks.
Yeah, I mean that was what was interesting back then. I mean, I really kind of cut my teeth during the .com boom, and that's really when things got going for me. I used to, I'd be in like a finance class, I'd step out to go to the bathroom, I'd buy some Amazon, I'd go back in class, I'd come back out, my buddies and we'd pump it out for like 15 points higher or what have you. It was, it was the Wild West back in those days.
Right, that's pretty neat, man.
Yeah.
When you're going into class, take a break and, buy it and go out half an hour later and sell it for 15 points, that's awesome.
Yeah, I mean, and what was crazy was at the time, that sort of everyone I think thought was the norm. I don't think anyone realized, one of the things that are unique about a bubble period is that people don't really realize they're in a bubble. These days, everyone.
No way.
Exactly. These days, you turn on the TV and it's the wall of worry. Everybody is looking for the next bubble, the next crash. And, as long as you have that level of skepticism, it's really usually not a bubble type of a scenario.
Yeah, you're right. Well, yeah, when the taxi driver or your hairdresser isn't talking about the latest stock tip, then it's usually not a bubble.
Yeah, I remember my doorman used to talk to me about Yahoo back in the day. Now I get into a cab or Uber or no one talks to me about stocks. The market's making new all-time high. The Nasdaq just got back to 5,000. Nobody cares. I was Peter had been in Manhattan for brunch a few months ago, and he and I met up and we were talking about this, and it was just like we both couldn't. It was both hard for us to comprehend that the market is making these these all-time highs, and for the most part, retail doesn't care. It's actually incredible.
Yeah, I mean, usually that's when the market, at least in my experience, does well when they have less participation of that retail money, and it's usually when the retail money comes in late is when they sell into it.
Right, they're the bag holders. That's
sense.
Correct. I mean, in my experience, what I've seen and from readings that I've had with I'm a big fan of Jesse Livermore, and I study some of the market psychology. And I think the theory is that funds manipulate the price up to the maximum point where their buying can no longer affect price, and then they sell rallies on the way down.
Oh, that's cool. That's interesting.
So, some of these funds are so big at this point that, they have to be careful with how they buy and sell because they can move markets. I mean, for example, if Carl Icahn, remember when he got out of his Netflix position, the day they reported, he had the big market to turn it over into. That's also an important thing. They need a lot of volume to turn these things over into, because in some instances, these funds own huge percentages of the stock. It's not just like you or I going out and, selling 100 or 1,000 or 200, shares that could be, filled in a couple of seconds. If these guys are selling, let's say, 1 million shares, that's a very different type of proposition to deal with.
Right, and there's computers and algos sniffing out every single move, so obviously that has led to the creation of the dark pools and things like that, but they don't want to be seen because, funds know if word gets on the street that they're buying or selling, you got 1,000 traders who's going to front run them, in the blink of an eye. So, you're absolutely right. But there's still advantages, I believe, and do you believe the same thing for the smaller independent trader?
Absolutely. I think there's a ton of things to be, to have as an advantage. The ability to move quicker, to be, I guess, more tactical in terms of their trading ability is for sure an asset. I think also one of the big pressures that the funds have that individual retail doesn't have is that they don't have to worry about scaling their returns. When you get big, you have to make a real lot of money to get those percentages. You know what I mean?
Exactly. How do you move the needle? You know what I mean? It's the law of large numbers then kicks in.
Right.
How do you're managing $2 billion and you return, 10%, 15%. Now you got to make that same money on, 2.2 billion, whatever, 2.1 billion. That you're right. That's a big game. So
yeah, it is for sure. I think a lot of the volume that has been hidden has been in the options. I was looking at some of the volumes and the way people play. Like even on my Twitter stream, I talk to a lot of people on there, and they're very rarely talking about buying shares. They're always talking to me about buying calls or selling puts or buying puts. And it seems like, a lot of the, I guess, the volume that we've been discussing that's been drying up might be moving into the options.
That's true. Yeah, I love the fact that there's, the option volume is huge. And like we were talking about before, how great is it that, of course, Thinkorswim and Tom Salzanoff led the way with all the technology, and now tastytrade.
Yeah.
The implied volatility and probability of expected moves. All that stuff was kind of privy for just the special floor traders and stuff. You know what I mean? And the really smart money. And now the average investor has those tools. So I think we do have a great advantage. You know what I mean? Even though, the big boys and girls, they always find a way to, dark pools, things like that. They say it's a level playing field, and to obviously some extent it is, but, now all of a sudden dark pools are hiding a lot of their orders. Obviously we don't see that, but there's still phenomenal opportunity for us. And the tools and technology that's there now, I think it's phenomenal. So
yeah, I'm
excited about that.
I had gone on TD had done something with their retail clients where they allowed us to go onto the floor and meet some of the guys at the NYSE, and they were saying that they thought that the trading software that the platform has is first rate, and in some instances better than their own. So yeah, the ability to do the charting, the ability to do technicals. I remember. I've never seen an instance where retail customers, I guess, had there was less of an advantage for the professionals as there is now. Obviously they have the algorithms and they're able to get news quicker, and that's their leg at this point. And even those few seconds make a difference, and they have their size advantages. But I would say the playing field is probably the most level it's been for a while, ever.
Absolutely.
Yeah.
Yeah, it's awesome. Good stuff. All right, so you started in school, in college trading. Is that all you do full time now, or?
Well, as you know, for a long time I had my own promotion company that dealt with nightlife. So I'm always an entrepreneur at heart, and I've been I did that for a long time. But as I got older, I kind of felt that it was getting a little bit. I felt like I was getting a little bit past my expiration, and my interest wasn't really there as much. It was becoming more and more to focus back into the markets, and I saw, so that was something that I wanted to pursue, and I've been, since about 2007, I would say, kind of doing it more full time. That's
great.
Yeah.
Yeah. So you're just, you're a normal guy. You're an entrepreneur at heart. You definitely had an edge or an advantage. I think is awesome. Because your grandfather helped you with stocks and stuff, which is great. Unfortunately, we didn't. My family, awesome family, love my mom and dad. But my dad never really talked stocks with me. Unfortunately, you know what I mean? So I know some people that get that at an early age. I remember a good friend of mine, Tony. I grew up with him, and his grandfather did the same thing. Showed him how to buy stocks and whatnot, and it just seems like a great thing to teach kids. And I know, of course, with everything that Tasty Trade has going on now, that's huge. Like teaching the young generation about stocks. So anyway, it's great that just a normal guy can get in here and do well. And so I just wanted people to be able to relate to you, Justin, and just like Blake. I mean, it was great learning that he was in the import-export business and had to learn the currency exchange rate, because that was his business and kind of led him to where he is now. So in any event, awesome. So why don't we, if you want to just take a couple minutes or another minute or so just to kind of finish up on that or whatever, or let us know what you want to talk about in the next segment, because we do have to take a break in about a minute. So what's on our agenda for this next segment here? What do you want to take a look at?
Well, so yeah, it was great going over a little bit of that. Obviously, we could stay and talk about more, but what I think we should discuss is the markets. Obviously, we're having a pretty large move. There was a big large move in the futures overnight, and there are some levels that I see as being very important for both the bulls and the bears, and I would like to discuss those. Also some of the momentum stocks. Maybe we'll talk about Apple. That seems to be a crowd favorite. If there's any other ones you want my 2 cents on, I'd be happy to throw it in.
Yeah, so we'll start broad markets, either the SPX or the SPY, and then we'll jump into Apple, and then we'll see how much time we have. Sound good?
Sound good. Let's get her done.
Awesome, man. All right, so Brad Agonis, Justin Pulitzer here, Shadow Trader Uncovered, folks. Hang tight. We'll be back in 90 seconds.
Real people are using.
Hey guys, what's going on? Thank you so much for tuning in. I'm doing the Shadow Trader Uncovered interview. It's streaming live on Tasty Trade. I'm just playing around with the Periscope here. You guys know that I'm going to be doing a live Q&A on this on Thursday. This is just sort of the precursor to that. Just getting comfortable with the software, working out the kinks, and here we go. If you guys have anything you want to ask, feel free. I'm watching the screen. SPY, I see someone's talking about. So SPY all day. Yeah, I'm going to discuss some big SPY levels in a second on the show. Let's see if we're back on. Hey, Brad, are you there? Guess we're still on hold. So let's see some comments, guys. I know there's a bit of a delay. There might be some that are coming out. I just saw someone mentioning about SPY. I'm going to be talking some SPY levels. I'm also going to be talking about Apple and Facebook most likely in the next few minutes and my take on the levels that are important for those. Getting some messages on Twitter.
New uniforms, the smell of fresh popcorn, the roar of the crowd. Don't wait till next year. Start the season off right.
Let's see what the tweets are saying. Cool, watching you on the screen, very close. Nice. Twitter, yep, I'll probably throw that in there if we have some time with regard to with Facebook as well. IBM doesn't really interest me so much. I'll probably discuss that. If you want to ask me about IBM, let's do it on Thursday. I'd be happy to discuss it. But no edge right here that I see. You have to break the double top. Here we go, back on the show.
All right, welcome back. Brad Agonis here with special guest Justin Pulitzer. Justin, welcome back. Let's get right into it. Do you want the SPX or the SPY? Doesn't matter.
Let's talk SPY. I know a lot of retail trades that. I had asked Nicole from TD to send me one of the list of some of the largest holdings from TD retail customers, and SPY is on there. So let's do it with SPY.
All right, so I got the SPY 6-month daily chart. Okay.
Yeah, I usually play with 9-month, but 6-month is fine. I'm looking at my chart, so I'm flying a little bit blind with you, but I'll talk to you about the levels that I see as important. So The first and foremost important day for me are always Fed days, and the high and the low of a Fed day to me is very important. And the Fed day that I see here, that was the important reference, the high was 211.27 and the low was 206.62. Are you
correct? Yep, I got it marked.
Now, if you take a look at the breakout range, remember we had that W breakout pattern that actually resolved higher?
Mm-hmm.
The high of that range was 206.42, so it's roughly the same, give or take 20 cents as the Fed. So for me, as long as we're below that level, the risk is lower. And if we're back above that, I see the risk is sort of being neutralized to higher. The important levels that I see, I sort of like to think about the SPY chart as terms of distributions, and I often use the volume profile to do that. So the upper distribution that I see is 208.97 down to 207.84. Anything above there to me keeps the highs in play. Below the 207.84, the range sort of expands down to 205.38, and we're hovering right about there now. That's sort of my caution line. If we're below that, I see it as being sort of into the middle to lower distribution that has room all the way down to a gap fill of 201.90, and that had also been an old high from a while back. By the time, if we do go down there, that we get there, it would probably roughly coincide with the 200 MA as well.
Gotcha. Okay.
So that's the area I sort of see as being key. I'm playing it currently with a put ratio in the SPY with, let me see how many days to expiration I have on. I'll pull up the I have 9 DTE. I'm doing it 1 by 2, being long the 205s and short the 202s.
So you're long the 205s and short 2 times the 202?
Right. I think the break.
Now, was that a debit trade, I'm assuming?
You know me. You know who you're talking to here. Of course.
Was it okay? So it was a debit. Okay.
No. I'm sorry. It was a credit. It was a credit trade.
It was a credit. Okay.
Oh no, credit. Yeah, let's get that firmed up. It was definitely a credit trade at the time. It's trading for a small debit now. I think I got it on. I don't remember. I think it was a really small one. It might have only been like 2 or 5 cents. It wasn't like a big one. I usually like to do 5 or 10 cents max, but I wasn't really playing for the credit. I'm playing for the spread. So as long as I sort of don't have to ante up to pay for the trade, then I'm sort of comfortable with it. In this instance, what I liked about this, it's a little. Last night, the plunge in the futures had me a little bit nervous about the trade because it was, the benefit of these is that if they come down sort of slow and steady, it's not good if it's too big of a plunge.
Right.
But what I liked about this is that the break even is right around 199, which is sort of the key level. There's not really that much. There's some support down there. Obviously 200's a big strike. That could be a key for OPEX. It's also the 78.6 of the recent range, although I don't really use the 78.6 that much. The real risk I see is to come down, at least if it comes down sharp and fast, would be to that 197.87, which is the reference low. We're still in the responsive type of market as opposed to initiative, so that gave me a little bit more confidence that there, it wouldn't just be a complete free fall. Even the low last night, if you take a look, was like a buck higher than the low from 4 days ago, the last swing. It sort of held it.
Right.
So
yes,
that's sort of what I'm watching. And, obviously we have some other, there are a couple of other levels in between there. I think that gap fill, that 201.90 to 202, will find some, I guess, muscle memory, so to speak.
Now, are you looking at the gap from, I see a couple gaps.
From
Which gap
2-2.
are you referring to? The
From 2-2.
February gap?
Yeah, February 2nd.
Yeah, 2nd and 3rd. Okay, gotcha.
Right. That's the gap.
All right, so now let me ask you something. If, these levels hold here,
Yes.
because we have support on the 11th of March, the 13th, and then last week on the 26th, if these hold, do you have any play to the upside? Because I like to give both scenarios, obviously.
Yeah, I'll give both. A couple of things. So the feathers, I know you always like to say what are the feathers in the bull's cap. One of the big ones I see is that the VIX didn't take out that double top of 1719. If you take a look on the VIX chart, the daily VIX chart.
Take a look at the VIX, yeah.
There's a double.
Yeah, so you're talking about the 26 high. Yep.
Yeah, there's one from 311 and then one from the 26. Right, we are below those highs. So as long as the VIX, I think, is below that area, I think the bulls still have a shot at upside. I think a lot of the selling has been probably for taxes and also end of quarter, the lock-in. The fund managers need to pay themselves, right? It's also a funny time of year. I think people are getting sort of ready for the summer, but not really. And we have
They also take their fees out usually once a quarter. You know what I mean?
Yeah, exactly.
Probably redemptions, take their fees.
Right.
Paid. So you're right. I think. And the other thing, Justin, I mean, I am in agreement. It's like, why didn't the VIX go higher? Number one, and number two, even when we were down 100, 80 points or whatever. These internals were far from bearish. They were bearish, but they weren't anything near what would suggest new initiating selling, in my opinion.
Yeah,
it felt like a liquidation break earlier, kind of caught ourselves, and I don't know. It just doesn't feel as bearish to me, even though obviously all top line figures are down. I'm not discounting that.
Right.
But what do you feel about the internal picture? Versus today's price action.
Well, first and foremost, I had discussed the VIX not taking out that double top, so that to me is still okay, bullish. I'm looking at the tick distribution for the NYSE today, and a lot of the bodies are over zero. So there is some, probably some bottom fishing and some buying here, maybe even some short covering. I think that the reason why today wasn't a gap and go, so to speak, was because we closed 10 points underwater yesterday. And, I've been telling you the last few days, you and I talk on the AIM Messenger, that MOC, which is the market on close order, for you folks out there who don't know what that means, basically all it is the amount of stock to buy versus sell institutionally at the close. That has been every day except for Friday, which I called the dollar menu, negative. I mean, I think the amount on Friday was under 100 million, and every day between then has been probably 300 million to $500 million. And yesterday, I was saying that it was huge. It was like almost it was almost 1.5 billion by the close.
Over $1 billion, yeah.
Yeah, that's a lot. I mean, that's what's considered size. Today, by the way, it's shaping up to be negative 200 million at the moment. So there's still the bias of selling. But, that could obviously switch. It's early. That kind of read starts really kicking into effect around 2:30 in the afternoon.
Awesome. All right, so we talked about the SPY, Justin. Let's talk about Apple. I know that's a stock you love to talk about, love to trade. I have a 6-month daily chart on.
All right, so
we're kind of sitting between the 20 and 50 period MA, so what are your thoughts here?
So the price pattern for Apple to me is very typical. If you take a look at the consolidation periods, I call it the box, apples in a box. You could take a look at the range from 9.3 all the way to those earnings, which were 10.21. Then again, from that sort of flash crash day low, which was 12.1, all the way to their earnings there, which was 127. And now if you go from the recent high all the way over to the earnings here, I think Apple is just going to be sort of caught in a range. It's sort of in a downtrend within an up channel, if you know what I'm saying.
I know what you're saying. I'm awake and I speak English, so
that's right.
I got you.
So my thinking on this is Apple is at some key levels here. It's hovering. The things that are a little bit concerning for me with Apple are the following. One is that we're below the day that it was announced that it was added to the Dow Jones Industrial Average. The pre-market high spike was 129.85. So anything below that, in my opinion, is still vulnerable to lower prices. The fact also that we've gotten up to that 129 now. Let's see, that first time we punched through it when we got 133s. Since then, that has been sort of the kryptonite for Apple. So I'm willing to say that I don't really see a need to be long Apple right here. I think it's okay to play it long, right or right out against the 50-day. But what gets me concerned is that Apple is below the 20-day moving average, and the 20-day moving average has started to slope downward. In my experience with trading Apple, which has been for a long time now, I find that Apple is the strongest and the most healthy when it's above the 20-day moving average. When it's below, it gets a little bit squirrely and prone to pullbacks and corrections. You and I had talked, I don't remember which show this was, where you and I had walked through. Do you want to show people the 1.168 Fibonacci extension from the old high. I think that was from 2011 to the low to now. 128.
Well, you know what, Justin? Unfortunately, we're running out of time, buddy. We only have like a minute to go. I guess just if you could summarize,
all right,
long, short, flat, Apple at this point.
I think you could. I think you can be neutral. I'm playing it with a put ratio. I'm along 115s and short 2 times the 110s. The same expiration that Peter's doing, actually.
Yeah, that's a DTE. That's the one after earnings. So that's DTE 20.
It's 30 days exactly right now.
30 days. It is the May 1, right? So DTE 30.
Yep, that's it.
Okay, cool. Yeah, because it's after earnings, because Apple comes out with earnings on the 27th, so you got to make sure you're after that with your options. Well, Justin, look, I wish we had more time, buddy. I really appreciate it. I know the other, people listening and watching appreciate it. Thank you so much for taking your time, buddy, and we will definitely do this again, all right? So I will talk to you real soon.
Absolutely. Thanks for having me on. If anyone wants to follow, it's at Justin Pulitzer on Twitter.
Oh, man, thank you. All right, folks, that's it. We are wrapped up. Justin P., Scotty P's cousin, is now signing off, and I'm signing off as well. Back to Cool with Pat and Katie coming up next.
All right, guys. So thanks for sticking around. I appreciate it. Let's just do Periscope here for a little bit, right? My mom tuned in. How do you like that? She told me I did a good job. So, guys, guys and girls, there's about 29 of you in the in chat here. This is my first Periscope. I used it while I was on the Shadow Trader show with Brad. So let's open up the floor. Let's take a few questions. Let's do a few here. The big Q&A is really going to be more on Thursday, which will be tomorrow. Obviously, tomorrow. Today's Wednesday. It's going to be after the close. So if you have any questions, be sure to tweet them to me at Justin Pulitzer, or we can, we'll probably do some live ones too. So thank you so much for tuning in. So let's see, what's wrong with Twitter? There's really not that much wrong with Twitter here that I see. The issue for me with Twitter is the overhead supply. If you take a look at the range levels that it's been in for a while, it's coming into that upward resistance. I see that being anywhere between 51, 87, all the way up to like 52s, even 53, 64. I think that the best way to play Twitter right now is to be short out of the money puts on pullbacks. You don't want to play it on a breakout, because if it comes back down, the IV gets jacked up and you have problems with the price with regard to Twitter. The way I'm playing it, I think sub 45 puts are the best way to do it. I sort of have a convoluted trade on myself currently. The way I'm in Twitter is I'm short 45 puts that are a little bit longer expiration. They're 30 DTE, and I'm long a put ratio of 1 to 2, 45-43 with 16 DTE, but that I'll probably have to re-up if the stock doesn't start getting jiggy. I think the stock has the ability to get up to the old reference high before the pullback, which was up around 56, but without earnings, it's going to be really hard to get through there. I think that we're just going to be in this sort of choppy range level. Also, if you have noticed, the market's been in a bit of a corrective phase too, so it doesn't have the sort of the gusto of the market to help carry it as well. Are there any more? No more questions, really? Let's see. All right, here we go. What's your thoughts on? Oh, all right. So CyberArk, FireEye, and PanW. That's Palo Alto Networks. So actually, I'm trying to get a fill on FireEye now. I've been working this order sort of all day. I'm going to give up soon. I was trying to work a put ratio of 36.5, 33s for at the time, 20-cent credit, although they're not as liquid, so it's probably not going to fill. The key reference level for FireEye, the way I see it, is 36.85. And that is also the channel low. So I think you can try, it's also the gap fill. So right around there, I think, is a good right or right out level. The way actually I would do this would be to sell out of the money puts, maybe the 33s, because that's the 61.8 Fibonacci retracement. So you could do it that way, or you could do it with shares. That would be the right or right out level. So I want to, let me just take a quick look at CyberArk. That's another one. That one's holding up a little bit stronger. That had actually done the gap fill, so that gives me a little bit more confidence that FireEye might do the same for a bounce trade. It's caught within the old up channel now. It's sort of at the resistance, so I would be a little bit cautious with that. Palo Alto is sort of had double top resistance here. I would be long if you're long. You don't want to be long with if it breaks the 50. That's been the hold, the support. So any close below the 50 starts getting to me a little bit iffy. The last swing low was 134.33. You want to be a little bit careful with that. Gave up crazy how gave up here. Oh, what did he? Okay, gave up the earn. Yeah, well, you know, I think a lot of people had been playing FireEye long, and they just used that to take profits. You know, you can see it had a long base and a consolidation, and I think people just used it to book profits. Any other ones you guys want to talk about? How are we doing with the market? We're just sort of hovering. Are you going to be more frequent on Periscope? Interview, whatever. Yeah, I mean, we'll see how Periscope goes. I haven't decided if it's going to be a regular thing for me or not. It may be. I don't see the reason not to. It seems to be a good outlet to answer your questions, particularly. Maybe we'll do it as a supplemental, like I do the weekend review on YouTube. Maybe we do once a week on Periscope also, sort of like a midweek thing. Could be like a Wednesday thing, and the other one is Sunday. We'll play with the dates. You know how I roll, guys. It's mob rule. If you have a date and preference, just put it out on Twitter, see if people agree with you. The more people who agree, the more likely it is that it happens. Let's get some more. Breath is so nothing right now. NYSE is just 1.05 to 1 negative. NASDAQ 2.21 negative. Ticks are sort of just middling here. We're just... Thanks, cool for you. Thanks, sure. You're most welcome. Thank you. I know you. I recognize you. You're always one of the loyal and faithful. Thanks, Coach. Appreciate it. You're most welcome. Thank you guys for tuning in. Yes, it'll be recorded on Thursday and it will be posted onto YouTube. I'm going to do my best to post this as well. The Periscope has a recording feature. I will be posting it. Any material I do, I try to post. One of the things that's a little bit frustrating for me with Periscope right now is that they don't have an Android app. You're most welcome. Thanks so much, Rosario. Yeah, one of the things that has been frustrating me a little bit is that they don't have an Android version yet. So if I do start doing Periscope more regularly, it'll probably be once they have the Android app out so that more people can watch it. Is the market going up this year? That's a good question. I am a little bit cautious with the market. If you take a look at one of my videos, I discussed that we're getting close to the 1.618 Fibonacci extension on the S&P, and I believe we've actually already reached it in the Russell. So we'll discuss the subscription service in a second. The thing that has me concerned is we have reached it in IWM. We've actually reached, in my calculation, the 1.272. I still see the 1.618 being potential to get up to 130, 175 in IWM. We're sort of within an up channel, and if you take a look at the price action in IWM, it's been a little bit better than S&P. SPY to me is getting a little bit iffy. We may just be in some type of a consolidation pattern like we were a few months ago that ranged from December to February. We may be just in one of those consolidations, and then we're going to pop. But it's getting a little iffy to me. Up at 214.17, based on your time frame between there and 213.40, that really is the 1.618 fib extension. So if there is going to be some type of a larger correction in the market, it may happen from there, and it could be really ugly if it doesn't support. Anything else you guys want to talk about? We're getting a little bit low on time because it's 3:06 and we're going to have to get some trades in before the close. So maybe we'll go till, I don't know, another 5 minutes or so. Getting some messages on Twitter of some people who are upset that there's no Periscope app on Android. So you guys got quiet. I guess, am I boring you? Sorry. All right. So is it okay to someone just asked me, Clay asked me about holding Apple, Facebook, and Microsoft. So let's take those one at a time. Apple did breach the 1.618 fib extension. The correction could be more steep, particularly if the market rolls over. I could see it coming down significantly, actually. I think that 115, 110 area, roughly around 109-ish was the gap fill. I think those 5 points will be a lot of chop and a lot of support. It'll be based on the market. If the market weakens, there is, believe it or not, room down to 100 or even 95 if there's some type of a larger correction. I am not calling for that yet. I don't see anything in the chart that shows me that yet, but I do think that there's a move to possibly to the lower channel. Facebook, I think it's going to 100. It's been acting a little bit weak today. It's actually been a little bit weak the last few days. I think it's just a lot of profit taking. That hit a 1.618 fib of the range, which isn't to me as important as something like Apple's, which was of a prior move. Facebook is still a bit young. The issue for me with Facebook is I think it just has a lot of these responsive sellers and it trades really choppy. It seems to have these vaults where it has multiple days up and then followed by multiple days down. The 50-day moving average has been really strong support. I think between here and there, you can probably start legging in, maybe with some short puts. I see this 80-ish area. Let's see, what was I looking at with regard to Facebook? Yeah, this 81.16 down to 80.34 should have some price memory. There could be some slippage, though, to 79.71. So somewhere in these 2 points, 79.71, by the way, was a last major high from a while back, and it also coincides with the current uptrend. So somewhere between here and there, yeah, I think you can nibble some Facebook. Microsoft, I don't believe in longer term. My problem with Microsoft is that they missed mobile. Google is starting to really eat their business with regard to applications. I don't necessarily know that I would be shorting Microsoft here, although it's teetering on some iffy levels. I think you could probably buy Microsoft for a bounce somewhere between 38.98 and 37.50. That area I think would be the buy the dip area for Microsoft if you want to play for right or right out, maybe via some short puts. That's not such a huge mover, so you probably won't get slammed in Microsoft too hard. Anyhow, guys, we're starting to get the close into the move into the close. Currently, just so you know, the market on close is it's not that huge. It's actually minus 145 million. It had been minus 200 million a while back. So the MOC has been trending down. There's been one update in the last couple of weeks, so that to me just shows me that there's like some more bigger money sellers. Someone was just asking about natural gas. Let's see. It's not one I follow that often. It looks like it's sort of kissing the bottom. You might have a rally back in natural gas. The real big breakdown was below 354-ish. Let's see now, sorry, 347. I'm having a hard time finding that low. It was such a while ago. So you may have some type of a throwback there, but you're not coming into like a seasonally huge period for natural gas unless there's some type of a really nasty hurricane season. So these energy stocks have sort of been a disaster. If you're looking at bottom fish, what I would suggest doing is going into some of their balance sheets and seeing how well they can cover their dividends. Anyone that looks like they're going to have to cut has a problem. Is there an outright short in anything I see? Yeah, I had talked about that in Gilead yesterday. I thought that it would look like it was breaking down. It did. I said to cover a little bit today at the 95 into the 95s. It looks like it's forming a bit of a bottoming tail, but Gilead to me, anything below 98.37 looks a little bit weak. If there's some type of a pop up between there and let's say $100, you could do a nice right or right out type of a short. If you want to still play it short from here, I'm fine with the put ratio. 91.73 was a important reference low, and then the one after that is 88.86. So that also would coincide, believe it or not, with a trend touch. So if you want to do some type of a put ratio where it terminates, the bottom strike is like an 88s, 89s, I think you'd be okay. Let's see how we doing here. Any more that we want to discuss? I think that's good for today, though. Anyhow, guys, let's not steal too much thunder from tomorrow's more formal one. And thank you so much for tuning in, and we will catch you guys tomorrow. Cheers.